welcome again to this week's episode of Policy and Profits. I am Antoni Esposito, CEO and founder of Ascalon VI Capital. I am joined by my very good friend, Antoni, Chief Economist at the Heritage Foundation. We are in the middle of a tsunami and going to speak a little bit about that today. EJ, I know you're traveling. You look fantastic. How's everything going?
Busy as always, Anthony. It is, on top of the constant tsunami, so to speak, of economic data that we've been getting. Now we have the, every 3 minutes a different story on the Iran war and more news out of the region. And there's a ceasefire. The ceasefire's off. Their talks are on. Talks are off. So it's been a whirlwind, to say the least. It's almost not worth trying to keep up with it, honestly.
Yeah, it's definitely been a challenge here as well. We were positioned very well for March and performed well. April has been a month of unwinding those short positions and downside positions and then trying to manage through exactly that. I mean, there are literally, we go 10 to 20 minute windows where we have multiple tweets that are completely contradictory from both sides. It just doesn't end. So it's definitely been, it's been a lot, to say the least. I think I'm looking forward to April kind of wrapping up here. And I know my wife is looking forward to April wrapping up as well, because I've been a little bit of a lunatic. All that said, the big shiny ball, we're heading into earnings season, but the big shiny ball has been Iran and the war in Iran. And we went from the engagement, the movement of troops, the assembly, the official bombing and engagement. And now the Strait of Hormuz has been the kind of like the ball that everyone's watching, right? Everyone wants to know what's going on with traffic. Everyone wants to know what structural damage has been done. And I pulled up these zero hedge articles. You had reposted a couple of these, I believe, on X. We're looking at a situation where, and strategically, phenomenal move by President Trump and the administration to actually take over and block the Iranian ports, which is essentially financially strangling them day by day, very slowly, just squeezing the air out of them to bring them to the table and get where we need to be as far as a negotiation, and to do that without dropping any more bombs or putting any boots on the ground. So that is working. However, the Strait is kind of closed. We're not seeing a lot of traffic to and from. Obviously, this is concerning. I guess part of the question I have is, as the markets have taken off and pretty much forgotten, aside from the intraday volatility and swings, which are actually slowing down now as well, based on the tweets. Markets taken off. It's off to the races, all-time highs across the board. Is there an underlying issue here? Is there an underlying economic tsunami that by the day is getting worse as the Strait remains closed, as infrastructure has been damaged, and as global trade has really been affected here? Are we just going to move on and shake off the dust, or is there more here to come once the relief rally's done and we kind of look below us and see how much air is there as an economy and as a market? How much damage is being done here with things like this, the Strait and traffic still being basically shut?
Well, quite a bit, Anthony. Look, I remain very, very concerned about this whole situation. I think we have a lot of these different economic crises, I guess you can call them, that are continuing to build behind the scenes. It is eerily similar to 2020, when you had all of these holes blown up in supply chains, and it didn't always show up right away. Certain things it showed up immediately, and then other things it just took a while for that to hit the consumer, essentially. I know we've talked about it before, but fertilizer might be the best one. There is just as much of a fertilizer crisis right now as there is an oil crisis. We've basically taken roughly the same percentage of each of the world's supply of oil and fertilizer off the table at this point. The difference is that the oil crisis is showing up already, has shown up for weeks now at the pump. You're looking at airlines. Lufthansa, for example, is canceling 20,000 flights, all of its like really short flights, essentially, that it doesn't make a lot of money on because it needs to try to save fuel. Several parts of the world probably only have a few more weeks of jet fuel left. Different areas of the Southeast Pacific have already run out of certain types of consumer fuels like gasoline or diesel. However, if we look at what's going on with fertilizer, that's not going to impact consumer prices for several months down the road. So come the autumn, when the higher fertilizer costs today are finally trickling down to consumer products and consumer prices, that's when you'll see that crisis really kind of, it's show its ugly head. So again, I remain very, very concerned about the whole situation with the Strait and about all of the kind of downstream effects, the knock-on effects, if you will, that we're gonna continue to see from this. So, all right, with all that in mind, if it all sounds like doom and gloom, how on earth do we have markets where we have them? I think a couple of reasons. One, I think markets continue to price in that this whole thing gets resolved pretty quickly and that the Strait gets open pretty quickly. And I know it's not quite how futures markets work, but if you look at WTI and Brent crude futures several months from now, markets seem to be pricing in much lower oil. On top of that, we do also continue to have monetary stimulus from the Federal Reserve. It's not huge. It's not the quantitative easing that we had in 2020 and 2021, but the Fed still is purchasing securities and they're continuing to grow the money supply. M2 is still going up at a pretty good clip. All of that is very positive for equity prices.
Yeah. Yeah, and I think it's certainly what the markets are looking at. Looking at a quick resolution, liquidity, and then a chase back into momentum, a chase back into where they need to allocate capital. And there is a large degree of FOMO. I mean, this started out the end of March. We had a huge rebalance. Pension funds had come in with a ton of equities to buy because of the drawdown. That was the end of the quarter. That's got this going, and Trump has done a good job, a masterful job, actually, with the tweets and with the progression through negotiations and the war to keep markets moving up and keep crude coming down. I would say, too, as we talk about energy, just as a slight positive, I was looking back at the Russia-Ukraine crisis under Biden. We were so poorly positioned for that domestically, where we had crude spike to 120 and gasoline at the pump went well over $5. In California, I think we were at $7.50. We had the same, just as a relative comparison, we had the same spike in crude this time to 120, and gasoline on average across the country came in at around 405, 408. So we were actually much lower, about 25% lower on the price at the pump with the same price of crude. And I think that probably helped soften the blow of this event. And that was really due to the policy and the preparedness that we were in position for under Trump. I think it definitely helped with this process. I know consumer sentiment is down at an all-time low. That will change, and Wall Street continues to pound the table that the consumer is spending money, everything's fine, credit worthiness is fine. The banks were out with reports, and Bank of America, for one, Citi, they're all talking about the fact that the consumer's fine and spending money, which is nothing new for America. So I think we are looking at a situation where we are definitely high momentum, high optimism, big relief rally. Our downside targets were hit as we've gone through week after week. We did that for about 8 weeks, and that all worked out. Now we're back breaking above resistance and on our way to a breakout. I think we're probably due for some retracement on the move. Ultimately, we're going to have to address valuations again. Ultimately, we'll have to address rates again. But for now, market is this is the market we have, and this market is kind of pinned back. It just refuses to come in. We had a small give back over the course of this week, but it wasn't much to mention. It's definitely to the upside and remains to the upside. And we have some big earnings starting to come up in the tech names. So that probably will be supportive. If we focus back on the Middle East and Iran, I had another question, because I'm just trying to turn over the stones and see what may be the unknown unknown or the known unknown. Some of the Middle Eastern, and I actually grabbed this from Bloomberg today, some of the Middle Eastern nations and some outside nations from the Gulf have actually asked essentially for a swap arrangement with the U.S. Treasury, which essentially turns into, as far as I understand it, a line of credit with the United States Treasury. this to me is concerning. One of the most concerning things I've seen that has not been mentioned in the euphoria of the market and the focus on the negotiations. And the reason I say that is the nations that are asking for this are actually nations that are pretty wealthy nations and are also nations which were looking to invest in the U.S. as part of the tariff negotiation. So that was private capital that should have been coming into the country. These are wealthy nations, petroleum nations, and they are now asking for a line of credit. Is this a bigger deal than what the market's making of it? No one talked about it today. It came and went. Not much to say. Or is this really not a big deal and something that's kind of typical and you would just expect the line of credit to be extended and we move on?
Anthony, I think a lot of it just depends on the seriousness of the situation. In other words, how much longer does the conflict drag on for? Part of what's at play here is that these nations are saying to us, look, if you want us to continue with the whole petrodollar scheme where we're settling all of these transactions in dollars, then we want support right now because they're not getting dollars. So they can potentially run short. These are countries that, although they do have a lot of wealth, they also have extremely high cash flow levels. In other words, every month it is a ton of money coming in and a ton of money going out. Many of these nations have so many entitlement programs built into each barrel of oil that they actually start losing money when oil goes below $60 a barrel. That's just based on their entitlement programs that they have. In other words, it's Saudi Arabia, perhaps most famously, they give so much money through these different programs to all of their citizens off of each barrel of oil that you literally have a lot of people in the country who can spend their whole life and never have to work. That's how robust, I guess you could say, the social safety net is. Maybe robust is too generous of a word. It's too large, obviously. So what I'm trying to get at, Anthony, is the fact that these countries depend on a steady flow of crude and at certain prices because they have so many expenses going out in dollars that they need the money coming in also in dollars. And if that's not happening, for a very short period of time, you have enough, FX that it doesn't really matter, and you have the dollars in reserves. But as that starts stretching on, as that problem continues for a while, you actually start to run short on dollars. And so I think my guess here is that that's what these swap lines are essentially designed to alleviate here. Again, we're not seeing, at least I haven't seen, asks for an outright gift from the Treasury of, look, this is your war. You created this mess. Give us $100 billion in just cash. I haven't seen that. But again, what it looks like is they need the dollars right now because that's what all of their expenses going out are in dollars. And because they're not selling oil, they don't have the dollars coming in right now. So that's kind of my read on the situation. And again, I think as the conflict drags on and as the situation worsens, I think the need for this is gonna grow.
Okay. All right. Well, the way it seems to me, and that's great insight, EJ. I really didn't know what to make of the request and the headline. It does seem as though the blockade is slowly choking out the regime in Iran. Militarily, obviously, we've shown dominance, and they probably don't have much left. But financially, they really can't continue to, again, not have any income. They need income to survive. And additionally, if they cannot ship out the oil that they have stored, they have to stop pumping the oil. Once they stop pumping the oil, they lose functionality, which I think you talked about last week. They actually lose capacity in those wells. So if the well is good for 100 units a day now and they shut it down, when they reopen it, it may only be good for 93 units. And that's it. That is what it is. It will actually deteriorate as far as its productivity if it's shut down. So I think that we're probably in a good position to end this quicker. I think the tweets back and forth and the craziness I am absolutely done with it. It's enough already, to be perfectly honest with you. However, short of the IRGC deciding that this is their holy war, they're going to draw a line in the sand and they're going to fight to the death now. I see this kind of wrapping up pretty soon, and negotiations being done, and it being pretty quiet moving forward, which sets up for some recovery economically. See where kind of where the bodies are, and when the dust settles, figure out how bad this was, and what kind of demand destruction occurred, structural damage occurred, and as far as the markets go, we'll get back to earnings, get back to rates, get back to liquidity, and get back to valuations and technicals, which I would welcome at this point, to be perfectly honest with you. So, great analysis, EJ. We are definitely it's definitely been an interesting couple of months. Do appreciate the time. Thank you very much, my friend. Always a pleasure. At Real EJ Antoni for the best X posts of the day. Charting is awesome. Information is awesome. I always appreciate jumping on and seeing what you've put up. And I'm at CMT_Anthony. If anyone wants to come out and see what I'm tossing up, see my views on the markets, or contact me about the fund, that is always welcome. EJ, have a great night, my friend. Thank you very much, and I will talk to you soon.
Anthony, the pleasure's all mine. Great to be with you.
Later, pal.